Good afternoon, everyone. Myself, Sai Nair. On behalf of Kirin Advisors, it's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. Today marks the final day of our three-day summit, featuring a powerful lineup of focused management meetings to conclude the journey on a high note. This is the fifth interaction of day three, and we are pleased to host Patil Automation Limited. From the management team, we have ourselves with Mr. Manoj Patil, promoter and managing director, Mr. Manoj Agrawal and Mr. Nitin from finance team. From Value Educator team, we have ourselves with Ms. Surangi Mule. So with that now, I would like to hand over the floor to Surangi ma'am. Over to you, ma'am.
Thank you for the introduction. So before we start, a quick background on Patil Automation. So Patil Automation is a Pune-based company that builds complete factory automation systems. They work with mainly automotive and EV manufacturers, helping them move from manual operations to fully automated welding lines, assembly lines, and special purpose machines. The company also works across several non-auto sectors like defense, railways, renewables, infrastructure, and even white goods. They handle everything end to end: design, manufacturing, testing, and installations, and have delivered projects in more than 10 countries. With that, I hand over to Mr. Manoj, sir, promoter and managing director. Over to you, sir.
Hello. Yeah. Good afternoon. Good afternoon, everyone. Good afternoon. Yeah. I can hand. I will hand over to Manoj Agrawal, sir, to present the presentation. So, can you please?
Sure, sir.
Yeah.
Just a second.
Good afternoon, everyone.
Yeah, Sakhi ma'am, you'll be sharing the PPT, right?
No, Manoj Agarwal sir, should I share?
Okay, we are not able to see the screen. Sorry, your presentation now.
Yes, Sakhi ma'am, you can go ahead
So
and
wait,
share.
Yes. हाँ मैडम आप फुल स्क्रीन पे कर दीजिए उसको.
sir, Sai, is it visible now?
Yes, it's visible.
At full screen, right?
Yeah.
Yes.
Take screen picture. Yeah. Go to the first screen. No? Yeah, okay. That is done. Yeah. Hello, good afternoon, everyone. So I welcome you all in the investors call, and here we are going to present you the profile and financials of Patil Automation Limited, and we will basically also run through the first half of 26 financials along with all the basically our projections and details and also the past numbers which we have performed. So starting with this basically this presentation, we will just update you about the tagline of the company, that is delivering intelligent assembly and welding line automation solutions. So this is the tagline we have, and we are endeavor in the field of assembly, welding, and line automation. Move to next slide. Just for the maintaining the flow, my request is that let me to run through the presentation, and we will answer all your questions in the basically end of the presentation. Second, go to the slide number 2. This is the standard disclaimer. Now moving to the slide number 3, that is basically relating to this financials. So basically, this is the comparison of first half 24-25 versus first half 26. So we were at 60 last year, and this year, half year, we are 74 CR of revenue. And as far as EBITDA margin is concerned, in absolute terms, we have reached from 10 to 13, and in terms of percentage, we have 17 to 18. And as far as NP is concerned, although the all this you look that this net profit number is coming same 10%, but in terms of absolute numbers, we have basically reached from 6 to 8 CR. Next. Okay. This is the complete details of first half of 25 and 26. If you look into that, total income is 60 to 73. That is 21.6% increase there. As far as EBITDA is concerned, we have reached from 10 to 13, and it is having the basically delta increase of 24.29%. EBITDA in terms of percentage also, we have basically bettered up by 38 BPS. Net profit from 6.12, it is 7.53. So 22.97% increase there. And in the margin percentage, 11 BPS is we have improved versus our previous year. Next. This is basically the guidance and support, and basically you can see that vision which we are getting from our managing director Manoj Patil sir. So basically this is the vision statement you can say, and his guiding statement we are here presenting for your basically ready reference and updates. Here, this slide basically indicate that our ability of designing and technological advancement. So in Patil Automation, it is, as you know, that we are Pune based, and we have our core value in designing and basically implementing turnkey project, line automation, and all the basically you can say that the company is we are now specializing in intelligent assembly, as we have updated in our tagline also. Then advanced we are also basically in the integrated advanced robotic control and precision engineering work, and it is basically delivering the efficiency, accuracy, and scalability of the manufacturing operations for OEMs as well as in terms of OEM. We are basically now in automobile and non-automobile, both the sectors. So Patil Automation build customized automation system and that enable manufacturing of the optimized products, maintaining consistent quality, and that also reduce manual dependency and improving the cycle time and productivity of the automotive as well as non-automotive sector. Over the year, company has evolved into trusted automation partner. Very basically strong tagline that we can basically just would like to stress upon this that evolve into trusted automotive automation partner. We are basically pointing out it, we are partner. We are not only the supplier. We are just not the basically you can that a vendor. We are partner. We when we are basically enter into any basically contract with our customer, we are basically considering them our partner, and we provide all the basically automations into now we are in electrical vehicles, we are in now renewable energy, we are also in heavy engineering, defense, and consumer goods as well. And the if you look into the last line, it is very important to note that the last line we are basically now enabling client to modernize their production line and adapt industry 4.0 standards. Next move. Okay, this is the glance that what kind of basically how we have moved from our beginning and how we are basically come up to now. Okay, so the company was founded in 2015. Then we have listed in NSE emerged in June 2025. We have the expertise in turnkey automation system. Then focus on sectors. We are in automotive, EV, renewable, defense, engineering, all the sectors. We are having the almost all the you can say that major sector of manufacturing. We have our present facility is 1.09. Just to basically update that this we are not adding of 59,000 of further basically capacity, which we have already built up and now it is in operational. So just to avoid the confusion, I am basically clarifying this point. And we have the designing hub in Vaner. Then we also have the ISO certification. We have the team size of 700 plus professionals. We have presence in 10 countries, and basically we have already supplied 14 countries. Uh, Key highlights of financial year 25 is that we have a total income of 118 CR, EBITDA of 19 CR, and net profit of 11 CR. And if you look into the key ratios, which are basically, you can say that key for the entire operation. If somebody can ask that what is the key ratio for entire operation, so I will tell that these are the two ratio, ROE and ROCE, and we are 20 plus. Rather, I can say that ROCE we are at 22% for the financial year 25. Okay. Uh, so this is the basically, you can say that a stage of our progression. Founded in 2015, Patil Automation Private Limited executed first international project in 2016. We are delivering export projects started in 2021-22. We crossed the milestone of 100 CR in 23-24. We also converted into public limited company in 2024 and expanding into further sector. As you know that in 25 we are also listed in NSE MR and expanding in the defense, railway and general engineering automation. Okay. Basically, this is the sector-wise our presence that we are elaborating in this slide. That for automotive also, where all we have the presence, and non-automotive also sector-wise we our presence we have basically highlighted. So we have our presence in two-wheeler manufacturing. Then there we are doing the complete assembly line, welding line automation, and conveyor and robotic handling as well. In four-wheeler manufacturing also, we have the BIW, then chassis, powertrain automation, door dashboard, robotic welding, leak testing machines, and end of line inspection machines also we are providing. EV automation. So this is the new sector that is now coming up, and here we are doing battery pack and motor assembly. Then we are also prismatic cells compression and industry 4.0 automation we are doing here. In HMCV sector, bus, tractor, and cargo. In HMCV, we are basically doing the MIG welding for suspension part and chassis also, and sport welding we are doing for BIW, and assembly and handling work is done. In defense and railway also we have presence. This is basically now coming into the second part, which is non-automotive sector, and here we have the presence in defense and railway automation of component assembly, testing system we are providing, and in construction and heavy engineering we have our presence, and we are basically doing robotic welding and assembly. Then material handling system and conveyor automation also we are providing. In solar and renewable energy sector we have the presence in automation of for solar panel and water heater assembly and testing machines, robotic enabled material handling and renewable component lines. In consumer, food and pharma assembly, testing, packing, we are providing, and we are also basically providing SCM and SPM and clean environment packaging system for the company. Okay.
Yeah, these are the different verticals in the automation, the welding automation, assembly automation, special purpose machines, material handling systems, EV automation, and every segment, the different lines of assembly robots, welding assembly lines, vehicle assembly lines, conveyors, battery pack, data centers assembly lines, prismatic assembly lines, and these are all with the industry 4.0 enabled systems. Next. So these all are the quality control and the product standardization, and because of that only we are adding the multiple lines, and compared to the last year, this year, and then the future also we are adding the more business, since because we made the standardization, and that standardization help us to make multiple projects in shorter time and deliver. So these are the some of the quality control systems available with us in-house facility for inspection, checking, and that is what we can give the complete zero defect delivery to the OEMs. Next. Yeah, this is the manufacturing footprint, the complete facility, which is in Chakan, Sudamre, 1.09 lakh square feet. And this facility is already running, and now we equipped with the end-to-end automation system, and the utilization up to the last year, what we have said that 87% capacity utilization. And now after the capacity expansion, which we already started and done, the capacity was 2304 units for complete line and assembly, and now it is expanded to the total 3454 units with the added 59,000 square feet facility, which is already started. These are the all customer base from all different auto and non-automotive areas, and majorly and all big OEMs of car and truck, tractors, and then the companies of non-automotives. Next. These are the some project which we have made as a case study, which is uh, in India, because now these are the bigger project of making the complete battery assembly, a battery tray assembly from the export, but we have made it complete turnkey project. This is required in the three-wheeler, four-wheeler EV vehicle of complete battery tray, and the customers are different in the uh, different EV manufacturers, which we can see, and we are supplying to the different customers. The turnkey project is for the majorly assembly for battery tray, which is required in the EV, and the infrastructure we have made the complete data centers, best assembly lines, and that is the turnkey. With very less manpower, we have made a fully automated line to for 3 gigawatt, and this is for the best. This line is almost completed, yeah. And the similar some project for three-wheeler and the cargo, the bigger industry, that is again for the heavy fabrications, and the fully automated line for two-wheeler, three-wheeler, and four-wheeler. And these are all with the multi-model line based IoT and Industry 4.0, which is very much important for first-time ride quality. And the some of the photograph of the lines you can see on the screen. Yeah. Next. These are the lines which you have made for cabin. These are the bigger size of cabin, fully robotic welding lines for JCB, Satrac, CNH, New Holland, and they are all allo goods manufacturers, and we are making the fully automated lines for them to make the cabins sub-assembly and the complete earth-moving equipment for complete automated lines. And in construction, these are the aluminum forms, which is very high production required and demand, which we have made a multiple line till now for making the aluminum welding. These are for the scaffolding required for the scaffolding and construction industry. This is made with complete aluminum. So this is again a technology which we have already done a tie-up with Fronius Austrian company to do the aluminum welding. Next. Yeah, these are the business which we are doing. The abroad and the export, the customer whom we are already supplying in India and their main parent companies we are supplying from India. These are the customers, and we are adding of now the other countries as well. If you see the screen, the first quarter.
Okay, I'll run through this financial number. So basically, in the first half 26, we have the automotive and non-automotive sector bifurcation. So we are roughly 51.5% in automotive and 48.5% in non-automotive. In FI, we had basically, you can say that 89% roughly was automotive. So from there, we have now improved to 51%. In financial year 24, if you look into that, we have again have the around 98% in automotive sector, and similarly in 23 also we had 97.4%. So basically from 97 to 98 and from 89 now we are basically here at 51.4% of our basically automotive, you can say that bifurcation of automotive and non-automotive sectors. This is basically the presence we have in India, in Gurgaon, Faridabad, Gujarat, Pune. We have Aurangabad, Bangalore, and Chennai. We have our facilities. Either we have the facility or marketing team or basically our service center are there in these locations. And we have the workforce of, if you look into that, this is the bifurcation of workforce. 54% is our shop floor HR and admin is basically, you can say that 1%. 20% is our management design. Sorry, 20% is our design team, and rest is the management and marketing and HR admin teams. Recently, in the month of September, we have acquired 2 subsidiaries. Yeah, we have acquired 2 subsidiaries, Me Robotics and Pentaco. So, Me Robotic, we have they have specialization in robotic, defense, automation, machine, and vision system. And Pentaco is having the basically you can say that focus on assembly line automation. Then they have servo press and trunking industrial assembly solutions. They are specialized in this. For both, we have acquired 60% of the equity, effective from you can say that end of September we have acquired the companies. They have also strategic value for Patil Automation. Like in it is basically you can say that step for us for entering into defense and mission critical sectors, border R&D and robotic integration.
Next. Yeah, this is actually overall view. I think can go to the next slide. Next slide. Yeah, this is the again the market size. Yeah. Yes. The market outlook which we have said. The management team. So in management team, yeah, the myself, Manoj Patil, and family, Aarti Patil and Prafulla Patil, and our independent directors, Santosh Patil sir, Ketan Chapekar sir, and Krishma madam. Yeah, these are the key pillar of Patil Automation. Next. The key management team, Vijay Patil, Sandeep Chaudhary, Niharika, Sanjay Patra sir, and Piyusha ma'am.
Okay. Now in this slide, we will run through the key ratios. Like ROE, we were at 17.3%. In 24, we moved to 27%, and now in 25, we have 27.41%. ROC, 23 it was roughly 13%. Now in 25 we are at a 22%. Debt equity ratio, you can see the improvement from 1.35, now we are at 43. Similarly, for debt service ratio, it was roughly 4, now we are at 11. Next slide, please. Okay. Current ratio is improving from 0.9 to 1.48. Receivable turnover ratio, it is from 4.2, it is 3.48. EPS 2.78 to 7.68, and interest coverage is improved from 3.98 to 11.5. Next slide, please. Okay. Total income.
This is the profit and loss statement.
Okay. This is the year-wise profit and loss statement from financial year 23 compared with 24 and 25. So it is clear indicator is there from 82. Now we are in 25, 122 CR is the total income. EBITDA is from 9.26 to 19. And in terms of percentage, it is improving from 11 to 16%. And profit after tax absolute number is improving from 4.2 to 11.7, and in terms of percentage from 5% we are at roughly 9.6%. Next slide, please. Okay, so these are the basically balance sheet numbers, and it is again compared with respect to 23, 4 and 25 now. So the numbers are already basically here, and it is basically all the ratio we have already discussed in the previous slides. This is the basically cash flow statement, and in the numbers are there that from the this cash flow from operating activity, it is 0.01. Now we are at 0.63. Then in cash from financing activity, it is from 15.57, minus 11.91 was there in 24. Now we are 8.24. So this is the basically net increase in cash flow and cash equivalent. Okay. This is basically next. Yeah. Okay. So I request this capacity and this expansion plan.
Yeah, this is actually a expansion which we already done. That is a 59,000 square feet facility which is already ready and started the activity. We are inaugurated, and thank you for support to build this, and the activity is already started in this. So basically, since we added the sectors which is non-automotive and the business already in hand, and that is the main reason for the new facility, which was very important for us to kickstart, and that is started 1.5 months before what we committed during the IPO stage. But now the facility is fully ready, and we already started the activities in that facility. We have started the acquisition of the companies to get the real technology integration, getting the additional customers and the know-how on different technologies. Very good order book in hand. That is again a strength which we get good business in pipeline, good orders in hand at this moment. The rapid setup model enables the facility projects become within the 6 months. So that is the activity which we already done. The service activity we are done. Sales and the expansion team is already in place. We have added this, and now the larger turnkey project which we are planning for the complete across industries is already started. The acquisition is already done, and this will again add up the good support in future for growth of PL. Next. These are the growth scale, where financial, the capacity expansion which we have done in terms of the square feet, in terms of the capacity, sectors which we already discussed, and the ability, the leadership, the strong order book we already discussed, and the future roadmap for the different sectors uh, to grow the PL. Next. Yeah, this is what the complete presentation, and uh, I think we are okay to move ahead for the next question and
Q&A
answer.
session. Okay. So participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and ask questions. You can also write down your questions in the chat box. Miss Nishita, you can go ahead and ask your questions.
Yes. Hello. Am I audible?
Yes, ma'am.
Yeah, your voice is a little bit less, but okay, we can hear you.
Yeah. So I had a few questions. One is on the non-automotive sector that we are focusing on. We've increased the revenue contribution from the non-automotive sector quite a lot from FY25 to H1 FY26. So what is the contribution going to be going forward? And in the non-automotive sector, if you can like tell us what is the revenue contribution from railway, defense, and renewable?
Yeah. So actually, in first half, since all the project which we do is project based dispatches. So first half we have made more than 50% non-automotive, but of course the order book at this moment in our hand overall for this year is now more than 155 CR. And in second half we will be balancing of automotive, because automotive projects in shop floor which is almost ready. So overall, if you see by end of year, we will be balancing of auto and non-automotive business, and maybe 60 and 40. So 60% is automotive and 40% is non-automotive will be there for this financial year. And the next financial year we will be again planning for 55 and 45. So more or less 50-50 we are planning for auto and non-auto. Just to add the our business revenue every year, the non-automotive business will be added further, and same automotive which we are doing from last 10 years, so it will be again added. But these are all added business in the our expansion growth. Your question of the additional uh, non-automotive business and the future, I think all this answer you get, but if you anything you can ask.
Yes. So, like just a follow-up question. You mentioned 155 crores of order book. So that is in non-automotive or overall order book is
So overall, it
155
is
crores?
overall automotive and
Okay.
non-automotive both together.
Okay. That's as of now, right?
Yes.
And so by the year end in FY26, how much do you anticipate the order book closing at?
Yeah, total order book, because our plan of revenue this year is 150 to 160 CR, and on that 60% we will be doing for automotive and 40% is non-automotive. And normally the order book for the next quarter after April will be around 20 to 25 CR. So that will be in pipeline for designing and the manufacturing activity.
Okay, so for April 2026, the order book will be around 20 to 25 CR.
Yes.
Understood. And another question was on in the non-automotive sector. How much does defense contribute, railway contribute, and renewable energy contribute? If you can give some sense on that.
Yeah, yeah. So basically, in non-automotive, our major business is one is the defense, the second is the railways, and third is the infrastructure and heavy industry. So if you divide all four, so in all four, the turnover of what we say the 40% business in non-automotive, it will be a, I think defense will be a, I think 20 to 25% area. Infrastructure is data centers and all. And some voice is coming back that I will mute. Yeah, I think if you mute
Those participants not speaking, please mute their speakers.
Nishikant, I think there's a bit of yeah.
Yeah, now okay, now okay. Sorry. So I'm saying that in four major non-automotive areas in defense, infrastructure, heavy industries, and railways, around 25 to 30% of that is the defense part. The data centers and infrastructure, that is additional 25 to 25%, and then balance is railways and the heavy industries.
Okay, understood. And my next question. Hello.
Yeah, I can hear you.
Yeah, okay. So my next question is on the new capacity that we've added.
Yeah.
Like you mentioned that we are already operational in the new capacity. What is the utilization currently and how fast can we ramp up?
Yeah, actually, we have inaugurated that facility recently, 15 days back, and we have given that intimation also the plant visit also. So now in shop floor, the production line of automation line is already started the assembly. Where since dispatch is not started from that facility, it is only in the assembly stage. But at this moment, 25% of the shop floor is already started of assembly. uh, Utilization, yes, once we start the dispatches, that will be actual utilization. But yes, we have started the assembly. 25% of the facility is already started, and in next 2 months, the complete facility will be fully operational. So we can start the assembling the project in 2 months. So it is a ramp up. Within 2 months, we can you can say that we will utilize that facility up to 70 to 80%.
Okay, and what is the peak revenue from that capacity or the total capacity of 3,400 units?
Yeah, a total capacity of 3,400 units. We said that to 250 CR we can make in that, and that for that the facility will be fully ready. Now the 25% of capacity in terms of assembly is already started, and in 2 3 months with the slow ramp up, the facility will be fully ready. So all this facility existing and the new all together, which we said 3,400 or 3,500 units, will be starting utilization immediately.
Okay, understood. Also, my next question would be on guidance. So, if you can give some outlook for FY27, you mentioned that we'll reach 160 crores of revenue target in FY26. If you can give some guidance on FY27 also.
Yeah, we have already planned for 27 240 to 250 CR.
Okay, and the margins will stay in the range of 18%.
Actually, margin of PAT margin, what we have seen the growth. Basically, it will be increased little bit because the facility will add up revenue out, but the common facility which is designed common facility for the manufacturing, which is an old plant, that is not increasing. The manpower will not increase, so the margin percentage will increase a little bit every year for sure.
Okay, so in FY26, what EBITDA margin level are we expecting?
Actually, it will be adding of additional 1% of what we are getting in last year.
Okay. So around 19-20%.
Yeah.
Okay. And My last question would be on the capex. What is the capex that we've done for this new facility?
Yeah, actually, we have planned total 55 capex, and the majorly the capex since the plant is ready, utilized, and some of the activities on the final finishing level is in process. But more than 80% capex is all, I think, completely utilized.
Okay. And are we planning any capex for FY27?
No, at this moment, there is no plan for
Okay.
27.
Okay. Thank you so much for answering all the questions. All the best.
Thank you very much.
Mr. Sarab Chawla, you can go ahead and ask your question.
Yes, hello, am I audible?
Yeah. Please go ahead.
So, sir, my question is again on the capacity side, sir. Like how we mentioned that at the current facility where we have about 2,300 units, we're doing a maximum revenue of 120 crore. And when the new facility comes up, that's an additional 1,100 units. So, how with fewer units are we going to get that 250 crore number? Because we're adding only 1,100 units. So, how with the fewer additional units are we going to get another 130 crores of revenue?
Yeah, actually, in existing facility, we have the shop floor, we have the design office, we have the common manufacturing facility which is required for fabrication, machining, quality, and this facility will be as it is for the common uses. And in new facility of 59,000 square feet, there is no offices, there is no manufacturing facility called fabrication. There is no quality rooms because all this common facility will use from the existing, and the complete area of 59,000 square feet will be utilized for 1100 units. That's the reason you find that if we do in 2300 units, 120 cr, how we are adding additional 120 or additional 130 cr in only 1100. That is the main reason that we are utilizing that shop floor only to make the project and execution part, and not the common facility. There is no office, there is no design facility, there is no fabrication facility, quality facility, inspection facility. Everything we utilize in the existing.
Okay, sir, got it. Thank you so much.
Thank you.
Yeah, Manu sir, just a request. Do you have any other device on your side with speakers?
Yeah.
Sir, just if you could just switch off the speakers. I mean, we have a
Hello,
echo because of
hello.
Know that speaker. Now it is okay.
Yes, sir. Now it's fine. Okay, Mr. Chirag, you can go ahead and ask your questions.
I wanted to understand how is your order procurement process?
Order procurement.
Yes, sir.
So that means you are saying that once we get the business, we release the POs to our supplier for manufacturing part. We release the POs for bonded parts, and that is what you are asking, right?
No, sir. My question is, how do you get the business?
Okay. How we get the business? So see, till last year, the business majorly from automotive, and automotive is all main OEMs of Tata, Mahindra, Bajaj, Honda, and Hero, and then four-wheeler, three-wheeler, two-wheeler, these companies and their tier one supplier. So it is all with our experience, my past experience. We got that business, and we are always flooded with the business, and we have done a very good business with that. Now with that experience and that expertise of very critical assembly line which we have made for automotive, now we started the non-automotive, where the compared to the automotive, these lines are a little bit simpler than automotive. Automotive is more critical. So in these areas, we have planned from last 2 years for the business development process team, and that team is now searching of the new businesses, new greenfield projects is for all auto and non-auto, and then we get the directly RFQs from them with the past experiences. And then once we receive the RFQ, we do the proposal, commercial, technical simulation, and then get the business. For example, since now we started the
non-automotive. For example, we are now doing a multiple line for data centers. So we know that these are the companies are coming up for greenfield project for for big facility for 3 gigawatt, 6 gigawatt, and then we follow up them, we connect them and send them the presentation how we can make that line in India with very competitive and with faster delivery, and then we get the business. Similar in industry and the solar panel assembly line in heavy fabrication structures and the batteries and EVs.
Okay. So continuing this, what would be your average order size?
Average order size every time and every year is different, but yes, we since we do business with every OEM, we get the order even 50 lakh, and we get a single order of 32 crore in hand. That is a single PO. So from 50 lakh to 32 crore PO. So in between, some orders from 3.5 crore, 7 crore, 6 crore. So that is the actual which we have a PO in hand, that is 32 crore a single order and 50 lakh a smaller order.
Okay, so once you get the order, how long is your execution timeline of the order?
Yeah, execution of timeline is depend on the customer greenfield project of their SOP plan, start of production plan. But yes, normally 4 to 6 months required to make the complete line ready from design, manufacturing, assembly, and throughout and trials at our end. And then installation at site is different. That is again 1 or 2 months. But you can consider that 4 to 6 months to manufacture the complete line.
And how about the payment post the completion? How long?
Yeah, so the when we receive the any of the POs, we take the 30 to 40% or sometimes 50% advance from the customer, and without that we don't accept. Once the line ready and trial done at our end, we ask the additional 30% payment. So only the 10% we get after installation and commissioning, and after dispatch within 1 month, 1.5 month maximum, we get the all 90% payment from customers.
So all the orders are against advance payment of 50%?
30 to 50%.
Okay. So you're saying basically the balance 10% is only the thing is which is like a credit to the customer.
Yeah, that credit is up to the installation commissioning, and once the line handover, then they release that payment.
So if you have a time cycle of 4 to 6 months, then the current order book of 155 CR would be ideally completed by March or April.
Yes.
And then you had told in the earlier one of the questions that you're looking at 25 CR order book by April.
Yeah, by April that 25 CR order will be ready in our shop floor for dispatches.
So what about any orders in pipeline?
Yes. Actually, the multiple projects at this moment in pipeline, which we have planned the execution of this year of 150, 160, and next year 240, 250. So for this projection, we already planned the business, because our order booking majorly start from December for the next year first quarter, because the timeline is 4 months approximately we consider. So from December, if we start booking, so first quarter we can dispatch from April, start dispatch from April. So order booking at this moment for next year target of 240 to 250 is already good, and we are in good phase at this moment.
So you mean to say already the negotiations have started for the order visibility?
Yes.
Okay. And what kind of orders are you looking at in the next 3-4 months?
These are the from automotive, some line and some lines from the railways, 2 lines from the data centers, and the heavy fabrication for solar structure, that is also in pipeline. So we are now a balancing of business and not taking only one area of business. For example, even if automotive, we have a business in hand, but we are taking only a selected business which is a faster delivery time with good margin, and then adding the different sector business to cover our next year target. So that is a strategy that we are not dependent on only one sector.
Okay, sir. Thank you.
Thank you, sir.
Yeah, Mr. Murali, you can go ahead and ask your questions.
Yeah. Thank you for the presentation, sir. So I just have, two questions about the technical part, and the other one is the financial one. This about technical one, like just my question is like, what are our spendings on especially R&D, and even within R&D again, especially relating to, skilling the staff about like, finding the new ways of doing the things and using the digital tools like, in a, design like computer design or CAE, CAM, project management area.
Yeah. Actually, for us, the R&D is majorly in the process and the designing part. Uh, uh, so for us, the standardization to make the line faster, the new sector assembly line concept is similar, only the process is different. So now, very soon we are starting the new facility office in Pune city of 160 people design. So in that we will be already hired and plan the new talent for the designing part, the R&D part for different sectors. For us, the designing part is the standardization, and in that designing we will be ready. For example, we know that in future so many lines are required for data centers. In future, so many equipments required for the construction equipments and the heavy structures. So we are now preparing ourselves to make a complete concept simulation, how we can build that line, because the other countries, these lines are already made, and we are visiting, seeing that line, getting the complete details, videos, photos, and on that basis we prepare ourselves to be ready to develop that line with our exclusive partners from foreign, like Austria. We have a very good technical tie-up for aluminum and the welding process. They are the number one in world, called Fronius, Austrian company. So similar in Japan, we are working with the robot people. So we know that in future these sectors are coming up, and we will be ready in terms of designing and process in our design department.
Just I have gone through your career page where I have seen is like, even some of the positions you're asking the candidates to have these skill sets, but you are looking the candidates of, like, qualifications like, ITI and diploma. Like they may not understand the criticality or the in-depthness of the, especially the design part, maybe little bit they can manage, but the CAE part, like, the engineering part, computer engineering part, and like, FE analysis, CFD analysis kind of, they may not understand that level of skills, right? So are you looking for really the seniors and, engineering like MTech level candidates, or how is that?
No,
How will you
actually,
manage,
we
I
need
mean?
the all level people, but we have in-house team for all training. So we have a in-house facility. We have tie-up with the institute where they will utilize our facility to train the engineers, the BA engineers, diploma engineers, and some of the fitters which is required in our industry. And we train them in our shop floor. We hire them, and some of the balance people we offer to our customer for their expansion. So definitely without man, the future, since our vision plan for business revenue is very high, and the important is the skill of designing, which we are doing ourselves, training of the new talent. And in shop floor we have our area which is defined to train the people, and we train them 2-3 months for assembly processes, testing processes, and then we join them as a trainee engineer. and we are giving even to the customer also from our side. So this is the in-house development facility, which we are adding more with doing the tie-up with different colleges, so we can hire from the after end of their graduation, we hire from them, and then we teach them, we give the complete training, and then we hired here and we give to the customer.
Okay, thank you. I have some other, but I think I don't want to take too much time. I'll just take one more question and finish it up.
Yeah.
This is about the capex, and especially the revenues and PATs. What is our, projection for the next 3 to 5 years, sir? Capex, revenue, and PATs.
Yeah, at this moment, since we if you see the our revenue from 23, 24, 25, 77, 115, 118. Now this year is 160, 150. Next year is 250 to 40. So we are growing with this growth. Definitely the facility, current facility, after adding 50,000 square feet, 57,000 square feet, 250 crore, we can generate the revenue from existing and the new facility. So at this moment, we have covered this, and for the 28, we are still not decided for additional capex, or we can make with the internal capex. That decision is at this moment is not done, but yes, we will be growing even the similar way which we have grown from last 2 years, and even the next 2 year also. But the capex required for after 28, at this moment we are not decided.
But like, you are expecting the same linear growth even, despite the geopolitical issues we are seeing, right? You
Yes,
don't
yes.
see any impact of them.
We don't see, because the market is very big. We are not dependent only automotive, only two-wheeler, only three-wheeler or four-wheeler. We are doing the business in all sectors, and we are now preparing ourselves in medical equipments. We are preparing ourselves for white goods, where the high volume is there. So the demand is very high. We are doing at this moment very small portion of, and still, even if the condition is very poor, and that case also, whatever revenue we have planned is more than enough at this moment. Yes, once we cross 2,000 crore, 2,500 crore, then yes, we have to think of the export business in addition to this, and we will then, that time we will be depend on the situation, the global situation and all. At this moment, there is no issue for the business.
Okay, thank you very much. I just request the organizers to don't, ask the two questions. Couple of questions I have put in my question and answers. Okay, please skip them. Thanks.
Okay. Sir, we'll take the last question from Mr. Shubham Gandhi, and we can just conclude the meeting as we have time constraints.
Hello,
So, yes, sir, you can go ahead.
am I audible?
Yeah. Please.
I just wanted to understand what is the working capital cycle like, and what will be the working capital days when company will have a 200, 300 crore kind of number. And also you said that to one of the participant, I think that 150 crore of project you are going to finish it in next order book in next 4 to 6 months, maybe this quarter, this financial year itself. So that would have led to, revenue north of 200 crore this year only. So how is this matching up? I mean,
No, actually, yeah. So your first question. So you have asked two questions,
yeah.
right?
Firstly, please explain the working capital. I mean,
Yeah.
आपने बोला कि
So
आप पैसे तो पहले ले
yeah.
लेते हैं.
So I think we will go one by one.
Yes,
So
yes.
for working capital, if you see, we are taking the business and selecting the business of taking the customer only with the advance, and without advance we don't accept any business. So minimum 30% to 50% we take the advance, and we start the working with that advance. We get that advance and to run that complete project for 4 to 6 months. Whereas when we do the complete manufacturing for our suppliers, we take the credit of 3 to 4 months. So sometimes 60 days and sometimes 110, 120 days credit from our suppliers. So within this, we can really cover all our cash flow, and we don't have any cash flow issue till now. Even if the business increase, the advances comes, and we will further negotiate with our dedicated suppliers to support us for the credit. So for us, there is no issue for the cash flow. The second question for the turnover, what you are saying, the order booking of 155 CR, and this year target is 150-160 CR. So overall revenue booking for this year, we are saying the amount. So by end of March, even if we do 150-160 CR as a invoice and revenue, but the projects in our shop floor, because one project making doing the complete assembly and trial require 3 months, 4 months. So this project will be in our shop floor, and that will be ready and dispatch in first quarter from April. So that's the reason maybe you see the differences.
ठीक है सर, ठीक है. Also sir, what is the working capital days? आप अगर days में बता सकते हो 200 days 250 days कितना है exact?
Yeah, it is ranging between 120 to 150 days.
Okay, but
Including the
surely less
inventory,
than...
including inventory receivable and everything.
Okay. And how much is the trade receivable, sir? मतलब अभी September number पे?
Come up again. I'm not basically.
What is the receivable number on September?
Receivable numbers.
Yeah.
Roughly 51.
51 CR?
Yeah.
Okay. ठीक है sir. Thank you so much.
Yeah. Sir, due to time constraints, I think we'll have to end this meeting here. So thank you, Manoj sir. Thank you all the participants who took their valuable time to attend this meeting. Further, if you have any more queries, feel free to reach out to us at research at corporate access @kirinadvisors.com. Thank you.
Thank you. Thank you very much.
Thank you, everyone. Thank you for joining.
Thank you everyone for joining us today. Thank you, Mr. Manoj sir, for sharing your valuable insights. Thank you.
Thanks.